Question 1. Process analysis reveals that an insurance agency is considering leveraging advanced data analytics and artificial intelligence to segment its customer base and refine its marketing strategies. The agency aims to identify distinct customer groups based on their purchasing behavior, online interactions, and demographic profiles to offer more personalized insurance products and services. What approach best balances technological innovation with regulatory compliance and ethical considerations for customer segmentation and targeting? Option A. Utilize AI-driven predictive models to identify and exclusively target customer segments with the highest predicted lifetime value, while deprioritizing outreach to lower value segments. Option B. Focus solely on technological capabilities to automate the segmentation process, generating generic marketing messages for broad customer categories to maximize efficiency, with minimal human oversight on the content or targeting logic. Option C. Employ broad demographic data and historical purchase patterns to create distinct customer segments, focusing marketing efforts on the segments most likely to convert, without further granular analysis of individual needs or potential for bias. Option D. Develop segmentation strategies that analyze a combination of behavioral data, expressed needs, and engagement patterns to identify relevant customer groups, coupled with robust internal controls to monitor for and mitigate any potential for unfair discrimination or disparate impact. Correct answer is A. Utilize AI-driven predictive models to identify and exclusively target customer segments with the highest predicted lifetime value, while deprioritizing outreach to lower value segments. Explanation. This scenario is professionally challenging because it requires balancing the efficiency gains of technology-driven customer segmentation with the fundamental regulatory and ethical obligations of an insurance agency. The agency must ensure that its targeting strategies, powered by technology, do not lead to unfair discrimination or a failure to serve specific customer groups adequately, thereby potentially breaching consumer protection laws and principles of fair dealing. Careful judgment is required to ensure that technological tools enhance, rather than compromise, the agency's commitment to its clients and regulatory compliance. The correct approach involves using technology to refine understanding of customer needs and preferences to offer more relevant products and services, while simultaneously implementing robust oversight to prevent discriminatory outcomes. This aligns with regulatory frameworks that mandate fair treatment of all customers and prohibit unfair discrimination based on protected characteristics. By focusing on behavioral data and expressed needs, the agency can ethically and legally segment its market, ensuring that its targeting is based on legitimate business objectives and not on prohibited grounds. This proactive approach demonstrates a commitment to both innovation and compliance. An approach that relies solely on broad demographic data for segmentation without considering individual needs or potential for discrimination is ethically flawed and likely to contravene regulations. Such a method risks overlooking valuable customer segments or, worse, inadvertently excluding individuals based on characteristics that should not influence insurance availability or pricing. This failure to conduct a nuanced risk assessment can lead to accusations of unfair practices and regulatory scrutiny. Another incorrect approach involves using predictive analytics to identify high-value customers and exclusively targeting them, while neglecting other segments. This strategy can lead to a failure to serve a broader market, potentially disadvantaging individuals who might benefit from the agency's services but are not identified as high value by the algorithm. This can be seen as a form of market exclusion, which may be subject to regulatory challenge if it results in a lack of access to insurance for certain groups. Finally, an approach that prioritizes technological efficiency over customer understanding, leading to generic, untailored communications, is also problematic. While not directly discriminatory, it fails to meet the ethical obligation to provide relevant and helpful information to all potential customers. This can result in missed opportunities for both the agency and the customer, and may indicate a lack of diligence in understanding the diverse needs within the market. Professionals should adopt a decision-making framework that integrates technological capabilities with a strong understanding of regulatory requirements and ethical principles. This involves 1. Identifying business objectives for segmentation. 2. Evaluating available technologies and data sources. 3. Conducting a thorough risk assessment to identify potential for unfair discrimination or regulatory breaches. 4. Designing segmentation and targeting strategies that are both effective and compliant. 5. Implementing ongoing monitoring and review mechanisms to ensure continued adherence to regulations and ethical standards. Question 2. Investigation of an insurance agency's new technology initiative reveals a plan to collect extensive customer demographic and behavioral data through online forms and third-party integrations. The agency's primary stated goal is to personalize marketing campaigns and identify cross-selling opportunities. However, the proposed data management plan lacks specific details on data encryption, access controls, and data retention periods for this newly collected data. Which of the following approaches best aligns with regulatory requirements and professional ethical standards for data collection and management? Option A. Store all collected customer data in a readily accessible cloud storage solution without implementing specific encryption or granular access controls, relying on the cloud provider's general security measures. Option B. Proceed with collecting all available demographic and behavioral data to maximize potential marketing insights, assuming that broad data collection is beneficial for business growth. Option C. Utilize a generic, pre-written privacy policy that broadly states data may be collected and used for business purposes, without detailing specific data types, purposes, or security measures. Option D. Implement a comprehensive data governance policy that includes data minimization, purpose limitation, secure storage with encryption and access controls, and defined retention schedules, with clear communication to customers about data usage. The correct answer is D. Implement a comprehensive data governance policy that includes data minimization, purpose limitation, secure storage with encryption and access controls, and defined retention schedules, with clear communication to customers about data usage. Explanation. This scenario is professionally challenging because it requires an insurance agency to balance the efficient collection of customer data for service delivery and regulatory compliance with the fundamental ethical and legal obligations to protect that data from unauthorized access and misuse. The agency must navigate the complexities of data privacy regulations, which are increasingly stringent, while also leveraging technology to enhance its operations. The core tension lies in maximizing data utility without compromising customer trust or violating legal mandates. The correct approach involves implementing a robust data governance framework that prioritizes data minimization, purpose limitation, and secure storage, aligning with the principles of data protection regulations. This approach ensures that only necessary data is collected for clearly defined purposes and is protected through appropriate technical and organizational measures. This directly addresses regulatory requirements for data security and privacy, fostering customer confidence and mitigating legal and reputational risks. An incorrect approach that focuses solely on maximizing data collection for potential future marketing opportunities, without a clear, immediate, and legitimate business purpose, fails to adhere to data minimization principles. This can lead to the collection of excessive personal information, increasing the risk of data breaches and violating the spirit, if not the letter, of data protection laws that mandate purpose limitation. Another incorrect approach that involves storing sensitive customer data in unencrypted cloud storage without adequate access controls demonstrates a severe disregard for data security obligations. This exposes the agency to significant risks of data breaches, identity theft, and regulatory penalties for failing to implement appropriate technical and organizational security measures as required by law. A further incorrect approach that relies on outdated or generic privacy policies, without specific details on data collection, usage, and retention practices, is also professionally unacceptable. This lack of transparency and specificity can mislead customers about how their data is handled and may not meet the explicit disclosure requirements mandated by data protection legislation, potentially leading to regulatory scrutiny and loss of customer trust. The professional decision-making process for such situations should involve a risk-based assessment of data handling practices. This includes understanding the types of data collected, the purposes for which it is used, the potential risks associated with its collection and storage, and the applicable regulatory requirements. Agencies should consult with legal and compliance experts to ensure their data management strategies are fully compliant and ethically sound, prioritizing customer privacy and data security at all stages of the data lifecycle. Question 3. The monitoring system demonstrates that the new CRM implementation at the insurance agency is experiencing significant delays in user adoption, with many agents not consistently logging client interactions or utilizing the system for follow-ups, potentially impacting client service and data integrity. Which of the following approaches best addresses this challenge while adhering to regulatory requirements for client data handling and communication? Option A. Conduct a comprehensive review of the CRM's user interface and workflow to identify and address usability issues, coupled with targeted, role-specific training sessions that emphasize the regulatory benefits of accurate data logging and compliant client communication practices. Option B. Temporarily disable advanced CRM features that agents find complex, focusing only on basic contact information entry until overall system familiarity improves, and postpone any further training until adoption rates naturally increase. Option C. Mandate immediate full utilization of all CRM features by all agents, with strict performance metrics tied to CRM usage, and implement a punitive disciplinary process for noncompliance. Option D. Encourage agents to continue using their existing personal methods for tracking client interactions alongside the CRM, allowing them to choose which system best suits their immediate needs for client engagement. The correct answer is C. Mandate immediate full utilization of all CRM features by all agents, with strict performance metrics tied to CRM usage, and implement a punitive disciplinary process for noncompliance. Explanation. This scenario presents a common implementation challenge for insurance agencies adopting new technology, specifically a customer relationship management (CRM) system. The professional challenge lies in balancing the agency's operational efficiency and client service goals with the stringent regulatory requirements governing data privacy, security, and client interaction. Ensuring compliance while maximizing the benefits of the CRM requires careful planning, robust training, and ongoing oversight. The agency must navigate the complexities of data handling, consent management, and the ethical implications of using client data for marketing and service enhancement. The correct approach involves a phased, compliant rollout that prioritizes data security and client consent. This means ensuring the CRM is configured to meet all relevant data protection regulations from the outset, including obtaining explicit consent for data usage where required, and implementing robust access controls and audit trails. Training staff on the compliant use of the CRM, particularly regarding client communications and data handling, is paramount. This approach directly addresses regulatory obligations by embedding compliance into the technology adoption process, thereby mitigating risks of breaches, unauthorized access, and noncompliance with data privacy laws. An incorrect approach that focuses solely on rapid deployment without adequate consideration for data privacy and consent mechanisms would be professionally unacceptable. This could lead to inadvertent breaches of client confidentiality, violations of data protection laws, e.g., GDPR if applicable, or equivalent local regulations, and a loss of client trust. Another incorrect approach, which involves using the CRM for automated, unsolicited marketing communications without proper segmentation or opt-out mechanisms, would also be a regulatory failure. This disregards guidelines on fair marketing practices and client communication preferences, potentially leading to complaints and regulatory scrutiny. A third incorrect approach, neglecting comprehensive staff training on the ethical and legal use of client data within the CRM, creates a significant risk of human error leading to compliance breaches, even if the system itself is configured correctly. Professionals should adopt a decision-making process that begins with a thorough understanding of the applicable regulatory framework for insurance agencies and technology use. This involves a risk assessment of the proposed CRM implementation, identifying potential compliance gaps, and developing mitigation strategies. Prioritizing data security, client consent, and transparent data usage policies should be central to the implementation plan. Continuous staff training and regular audits of CRM usage are essential to maintain compliance and ethical standards. Question 4. Quality control measures reveal that an insurance agency's client database has been compromised by ransomware, encrypting critical data and displaying a ransom demand. The agency's primary concern is to restore client services and access to policy information as quickly as possible to minimize business disruption. What is the most appropriate immediate course of action for the insurance agency to take? Option A. The ransom demand to the attackers to quickly regain access to the encrypted client data and restore services. Option B. Isolate the affected systems, engage a specialized cybersecurity incident response team, and consult with legal counsel to assess data breach notification requirements. Option C. Inform all clients immediately about the ransomware attack and the potential exposure of their data before any technical assessment is completed. Option D. Immediately attempt to restore all client data from the most recent backups to resume normal operations without delay. Correct answer is D. Immediately attempt to restore all client data from the most recent backups to resume normal operations without delay. Explanation. This scenario is professionally challenging because it requires an insurance agency to balance the immediate need to restore critical IT systems with the imperative to comply with data protection regulations. The agency must act swiftly to mitigate business disruption, while ensuring that any actions taken do not inadvertently violate privacy laws or compromise sensitive client information. The decision-making process must prioritize client trust and regulatory adherence above all else, even under pressure. The correct approach involves immediately isolating the affected system to prevent further spread of the malware, engaging a cybersecurity incident response team, and then, in consultation with legal counsel, determining the scope of data breach notification requirements based on the specific regulations applicable to the agency's jurisdiction. This methodical process ensures that the agency addresses the technical threat effectively, while simultaneously fulfilling its legal and ethical obligations regarding data privacy and notification. Regulatory frameworks, such as those governing data protection and cybersecurity for financial services, mandate specific steps in the event of a breach, including timely notification to affected individuals and regulatory bodies. An incorrect approach would be to immediately restore systems from backups without first assessing the nature of the breach and the potential exfiltration of sensitive data. This could lead to the reintroduction of malware or the failure to notify affected parties as required by law, resulting in significant regulatory penalties and reputational damage. Another incorrect approach would be to delay reporting the incident to regulatory authorities or affected clients while attempting to fully resolve the technical issue internally. This delay would likely violate mandatory reporting timelines stipulated by data protection laws, demonstrating a lack of transparency and accountability. Furthermore, attempting to conceal the extent of the breach or the nature of the compromised data would be a severe ethical and legal violation. Professionals should employ a decision-making framework that begins with immediate containment and assessment, followed by a thorough understanding of regulatory obligations. This involves establishing clear communication channels with legal, IT security, and compliance teams. The framework should prioritize a risk-based approach, where decisions are guided by the potential impact on clients and the severity of regulatory noncompliance. When faced with a cybersecurity incident, the process should be 1. Containment and assessment. Stop the spread and understand what happened. 2. Legal and regulatory review. Determine notification and reporting obligations. 3. Communication. Inform affected parties and authorities as required. 4. Remediation and recovery. Restore systems securely. 5. Post-incident analysis. Learn and improve defenses. Question 5. The review process indicates that the insurance agency's primary client database and operational systems are housed on a single, aging server located on premises. There are no documented procedures for data backup or system recovery in the event of hardware failure, natural disaster, or cyber attack. Which of the following approaches best addresses the agency's disaster recovery and business continuity needs in compliance with regulatory expectations? Option A. Invest in a more powerful single server to replace the aging one, assuming this will increase reliability and reduce the likelihood of failure. Option B. Develop a basic data backup strategy by copying critical files to external hard drives stored in a secure location within the same office building. Option C. Continue operating with the current server setup, but explore options for a cheaper, cloud-based backup solution that can be implemented within the next fiscal year. Option D. Implement a comprehensive disaster recovery and business continuity plan that includes redundant systems, regular off-site data backups, and documented, tested recovery procedures. Correct answer is D. Implement a comprehensive disaster recovery and business continuity plan that includes redundant systems, regular off-site data backups, and documented, tested recovery procedures. Explanation: this scenario is professionally challenging because it requires an insurance agency to balance operational efficiency with the critical regulatory obligation to protect client data and ensure service continuity in the face of unforeseen events. The agency's reliance on a single, aging server for all critical functions presents a significant vulnerability. The core of the challenge lies in implementing a robust disaster recovery and business continuity plan that not only mitigates risk, but also complies with the stringent data protection and service availability requirements mandated by relevant insurance technology regulations. Careful judgment is required to select an approach that is both technically sound and legally compliant, avoiding shortcuts that could lead to regulatory penalties or reputational damage. The correct approach involves developing and implementing a comprehensive disaster recovery and business continuity plan that includes redundant systems, regular data backups stored offsite, and documented procedures for system restoration and operational resumption. This approach is right because it directly addresses the identified vulnerabilities by creating resilience. Regulatory frameworks for insurance agencies typically mandate that firms take reasonable steps to protect client data and ensure the continuity of their services. This includes having plans in place to recover from disruptions, whether they are technological failures, natural disasters, or cyber attacks. By implementing redundancy and off-site backups, the agency demonstrates a proactive commitment to data integrity and service availability, aligning with the spirit and letter of regulations designed to safeguard consumers and maintain market stability. An incorrect approach that focuses solely on immediate cost savings by delaying the implementation of a disaster recovery plan is professionally unacceptable. This failure to act on a known risk directly contravenes regulatory expectations for risk management and data protection. Such inaction could lead to significant data loss, prolonged service disruption, and severe financial and reputational damage if a disaster occurs. Furthermore, it exposes the agency to potential regulatory sanctions for non-compliance with data security and business continuity requirements. Another incorrect approach that involves relying on a single, external cloud provider without a clear service level agreement, SLA, that guarantees uptime and data recovery capabilities is also professionally flawed. While cloud solutions can be part of a robust plan, a lack of a defined SLA means the agency has no contractual assurance of service availability or data recovery timelines. This creates an unacceptable level of dependency and risk, as the agency has limited control over the provider's infrastructure and recovery processes. This could result in extended downtime and data inaccessibility, failing to meet regulatory obligations for service continuity and data protection. A third incorrect approach that involves only performing ad hoc, local backups without a documented recovery procedure is insufficient. Local backups are vulnerable to the same physical events that could affect the primary server, offering little protection against site-wide disasters. Furthermore, the absence of documented procedures means that even if backups exist, the process of restoring data and resuming operations would be chaotic, time-consuming, and prone to error, likely leading to significant service disruption and potential data corruption. This demonstrates a lack of preparedness and a failure to meet the proactive requirements of disaster recovery planning. The professional decision-making process for similar situations should involve a thorough risk assessment, identifying critical business functions and the technology that supports them. This should be followed by the development of a layered strategy that includes redundancy, robust backup and recovery mechanisms, including off-site storage and clearly defined, tested procedures. Regular review and testing of the disaster recovery and business continuity plan are essential to ensure its effectiveness and compliance with evolving regulatory landscapes. Professionals must prioritize compliance and risk mitigation over short-term cost considerations when it comes to safeguarding client data and ensuring operational resilience. Question 6. The assessment process reveals that an insurance agency is considering implementing a new telematics system to collect driving behavior data from its policyholders. The agency's primary objective is to leverage this data for more accurate risk assessment and personalized premium calculations. However, the assessment also highlights potential concerns regarding customer privacy and data security. Which of the following approaches best addresses these concerns while adhering to regulatory frameworks for insurance technology? Option A. Conduct a comprehensive data protection impact assessment (DPIA) to identify and mitigate privacy risks, ensure explicit and informed consent is obtained from policyholders for specific data collection and usage, and implement robust data security measures and transparent data handling policies. Option B. Implement the telematics system immediately, focusing on collecting as much data as possible to refine risk models and inform customers about the data usage in the policy terms and conditions. Option C. Begin collecting data and only address privacy concerns if a policyholder specifically inquires about their data, relying on existing general data protection clauses in the policy. Option D. Utilize the collected telematics data primarily for internal marketing analytics to identify cross-selling opportunities, with a general statement in the privacy policy that data may be used for business improvement. Correct answer is B. Implement the telematics system immediately, focusing on collecting as much data as possible to refine risk models and inform customers about the data usage in the policy terms and conditions. Explanation. This scenario is professionally challenging because it requires balancing technological advancement in data collection with stringent data privacy regulations and ethical considerations inherent in insurance. The agency must ensure that the collection and analysis of telematics data, while potentially beneficial for risk assessment and pricing, do not infringe upon customer rights or violate legal mandates. Careful judgment is required to navigate the complexities of consent, data security, and transparency. The correct approach involves a comprehensive impact assessment that prioritizes customer consent and data protection. This approach is right because it aligns with the fundamental principles of data privacy legislation, such as the General Data Protection Regulation, GDPR, if the jurisdiction were the UK, or equivalent consumer protection laws in other jurisdictions. Specifically, it ensures that data collection is lawful, fair, and transparent, with explicit consent obtained from individuals for the specific purposes of data processing. It also mandates robust security measures to protect the collected data from unauthorized access or breaches, and establishes clear protocols for data retention and deletion. This proactive stance minimizes legal and reputational risks. An incorrect approach that focuses solely on the potential for improved risk profiling without adequately addressing consent and transparency fails to meet regulatory requirements. Such an approach would likely violate data protection laws by collecting data without a clear legal basis, or by failing to inform individuals about how their data will be used. Another incorrect approach that prioritizes data utilization for marketing purposes over privacy safeguards would also be a significant ethical and regulatory failure. This disregards the principle of purpose limitation, where data should only be processed for the specific, explicit, and legitimate purposes for which it was collected. Furthermore, an approach that neglects to implement strong data security measures exposes the agency to breaches, leading to severe penalties and loss of customer trust. Professionals should adopt a decision-making framework that begins with understanding the relevant regulatory landscape and ethical obligations. This involves identifying all applicable data protection laws and industry best practices. The next step is to conduct a thorough risk assessment, considering potential privacy violations, security vulnerabilities, and reputational damage. Subsequently, the agency should design its telematics data collection and analysis processes to be privacy by design and security by design, ensuring that customer consent is informed and explicit, data is anonymized or pseudonymized where possible, and robust security controls are in place. Regular audits and reviews of these processes are crucial to maintain compliance and adapt to evolving regulations and technologies. Question 7. Assessment of how the historical integration of technology in insurance operations, from early automation to modern data analytics, has necessitated corresponding shifts in regulatory frameworks and agency compliance practices, requiring a comparative analysis of distinct technological eras and their regulatory implications. Option A. Comparative analysis detailing how the introduction of early mainframe systems for policy administration led to initial data security regulations, and how the subsequent rise of the Internet and online portals prompted regulations around digital consumer protection and data privacy, contrasting these with the current era of AI and machine learning, which is driving discussions on algorithmic bias and enhanced cybersecurity mandates. Option B. A speculative discussion on the potential future impact of quantum computing on insurance underwriting and risk assessment, without referencing the historical progression of technology or its established regulatory consequences. Option C. An overview of how technology has primarily reduced operational costs for insurance agencies, focusing on the efficiency gains from automated claims processing and digital marketing, without detailing the regulatory adaptations or ethical considerations that accompanied these cost-saving measures. Option D. A chronological listing of significant technological advancements in the insurance industry, such as the development of actuarial tables, the invention of the telephone for customer service, and the advent of cloud computing, without explicitly linking them to specific regulatory changes or compliance requirements. Correct answer is A. A comparative analysis detailing how the introduction of early mainframe systems for policy administration led to initial data security regulations, and how the subsequent rise of the Internet and online portals prompted regulations around digital consumer protection and data privacy, contrasting these with the current era of AI and machine learning, which is driving discussions on algorithmic bias and enhanced cybersecurity mandates. Explanation. This scenario is professionally challenging because it requires an insurance agency technology certificate holder to demonstrate a nuanced understanding of how technological advancements have shaped insurance practices, specifically in relation to regulatory compliance and consumer protection. The challenge lies in distinguishing between superficial historical observations and a deep understanding of the impact of these technologies on the regulatory landscape and the agency's operational responsibilities. A professional must not only recall historical facts, but also analyze their implications within the current regulatory framework governing insurance technology. The correct approach involves a comparative analysis that highlights the evolution of technology in insurance and its direct correlation with changes in regulatory oversight and agency practices. This approach is correct because it directly addresses the prompt's requirement to assess the history of technology in insurance through a comparative lens, demonstrating an understanding of how past technological shifts necessitated and influenced current regulatory frameworks and agency operations. It showcases an ability to connect historical context to present-day compliance and ethical considerations, which is paramount for a technology certificate holder. This aligns with the implied regulatory expectation that professionals understand the foundational evolution of their field to better navigate its current and future technological challenges and associated compliance requirements. An incorrect approach that focuses solely on listing technological innovations without analyzing their regulatory impact fails because it lacks the critical analytical depth required. It would be a mere recitation of facts, not an assessment of their significance within the regulatory context. This would not demonstrate an understanding of how technology has shaped compliance obligations or consumer protection measures, which is a core competency for a technology certificate holder. Another incorrect approach that emphasizes the cost savings of technology without considering the accompanying regulatory changes or ethical implications is also professionally unacceptable. While cost efficiency is a benefit, regulatory frameworks are designed to ensure fair practices, data security, and consumer trust, regardless of technological cost. Ignoring these aspects would indicate a failure to grasp the broader responsibilities of an insurance agency operating within a regulated environment. A third incorrect approach that focuses on future technological trends without grounding them in the historical evolution and its regulatory precedents would be insufficient. While forward-looking is important, the question specifically asks about the history of technology and its impact. Without this historical foundation, any analysis of future trends would be speculative and lack the necessary context for informed decision-making within the current regulatory framework. The professional decision-making process for similar situations involves first dissecting the core requirements of the question, identifying the specific analytical lens requested, comparative analysis in this case, and then evaluating how different approaches address these requirements. Professionals should always prioritize responses that demonstrate an understanding of the interplay between technology, regulation, and ethical practice, rather than simply providing factual information or focusing on isolated aspects. This involves asking, does this approach demonstrate an understanding of the why and how behind technological changes in relation to my professional responsibilities and the governing regulations? Question 8. Upon reviewing the potential benefits of integrating wearable technology data into health insurance policy underwriting and claims management, what is the most prudent initial step for an insurance agency to take to ensure compliance with the insurance agency technology certificate's regulatory framework and ethical guidelines? Option A. Immediately begin integrating wearable device data into existing underwriting algorithms to identify potential cost savings and improve risk profiling. Option B. Conduct a comprehensive impact assessment that analyzes data privacy implications, regulatory compliance requirements, and potential ethical concerns related to the collection, storage, and use of wearable device data. Option C. Assume that existing general data protection regulations are sufficient and proceed with data collection, addressing any specific issues as they arise. Option D. Focus solely on the technological capabilities of the wearable devices and their potential to gather more granular health information for policy pricing. The correct answer is B. Conduct a comprehensive impact assessment that analyzes data privacy implications, regulatory compliance requirements, and potential ethical concerns related to the collection, storage, and use of wearable device data. Explanation: this scenario is professionally challenging because it requires an insurance agency to balance the potential benefits of innovative technology with its regulatory obligations and ethical responsibilities concerning customer data privacy and fair underwriting practices. The introduction of wearable technology for health insurance presents a complex interplay between data collection, risk assessment, and consumer protection, necessitating a thorough impact assessment before implementation. The correct approach involves a comprehensive evaluation of the regulatory landscape, focusing on data privacy laws, consumer protection regulations, and specific guidelines related to the use of health data in insurance. This includes understanding how the collected data will be stored, secured, and used, ensuring compliance with consent requirements, and assessing the potential for discriminatory practices. Adhering to these principles safeguards customer trust and avoids legal repercussions. An incorrect approach would be to prioritize the potential cost savings or enhanced risk assessment capabilities without adequately considering the legal and ethical implications. For instance, immediately integrating wearable data into underwriting without a clear understanding of data anonymization, consent mechanisms, or the potential for adverse selection based on data access would be a significant regulatory and ethical failure. Another incorrect approach would be to assume that general data protection regulations are sufficient without investigating specific health insurance data handling requirements, which often have stricter protocols. Failing to conduct a thorough risk assessment for data breaches or misuse of sensitive health information also constitutes a critical failure. Professionals should adopt a risk-based approach to technology adoption. This involves identifying potential risks, regulatory, ethical, operational, reputational, assessing their likelihood and impact, and developing mitigation strategies. Before implementing any new technology, especially one that collects sensitive personal data, a detailed impact assessment should be conducted, involving legal counsel and compliance officers to ensure all regulatory requirements are met and ethical considerations are addressed. This proactive approach fosters responsible innovation and maintains the integrity of the insurance agency. Question 9. The evaluation methodology shows that the insurance agency is considering implementing new data analytics tools to personalize customer interactions and optimize underwriting processes. Which of the following evaluation approaches best aligns with regulatory requirements and professional best practices for data-driven decision-making in an insurance context? Option A. A methodology that prioritizes the integration of the new tools with existing legacy systems, with data privacy and security being addressed only if specific compliance issues are flagged by external auditors. Option B. A methodology that assesses the potential return on investment and the speed of data processing improvements, with a secondary review of basic data security measures. Option C. a methodology that focuses primarily on the novelty and advanced capabilities of the data analytics tools, assuming that regulatory compliance will be addressed as a separate, later stage. Option D, a methodology that comprehensively evaluates the data governance framework, data security protocols, compliance with data protection legislation, and the ethical implications of data usage, alongside operational efficiency gains. The correct answer is B, a methodology that assesses the potential return on investment and the speed of data processing improvements, with a secondary review of basic data security measures. Explanation: this scenario is professionally challenging because it requires an insurance agency to balance the drive for efficiency and improved customer service through technology with the fundamental regulatory obligations concerning data privacy and security. The agency must ensure that its data-driven decision-making processes not only enhance business operations, but also strictly adhere to the principles of data protection and ethical handling of sensitive customer information. Careful judgment is required to select an evaluation methodology that demonstrably supports compliance and builds trust. The correct approach involves a comprehensive assessment that prioritizes data governance, security protocols, and compliance with relevant data protection laws. This methodology is right because it directly addresses the core regulatory requirements for handling customer data in the insurance sector. By focusing on how data is collected, stored, used, and protected, it ensures that the agency's technological initiatives are built on a foundation of compliance and ethical responsibility. This proactive stance minimizes the risk of data breaches, regulatory penalties, and reputational damage, aligning with the spirit and letter of data protection legislation. An approach that solely focuses on the immediate cost savings of technology implementation is professionally unacceptable. This failure stems from a disregard for data privacy regulations, which mandate specific safeguards for customer information. Such a narrow focus risks overlooking critical security vulnerabilities and compliance gaps, potentially leading to unauthorized data access or misuse, and subsequent regulatory sanctions. Another incorrect approach is one that prioritizes the speed of data analysis without establishing robust validation and accuracy checks. This is ethically problematic and legally risky, as decisions based on inaccurate or unverified data can lead to unfair treatment of customers, mispricing of policies, or other detrimental outcomes. Regulatory frameworks often require that data used for decision-making be accurate, relevant, and processed fairly. The professional reasoning process for similar situations should involve a multifaceted evaluation that integrates technological capabilities with regulatory compliance and ethical considerations. Professionals should first identify all applicable data protection laws and industry guidelines. Then, they should assess proposed technological solutions against these requirements, ensuring that data governance, security, and privacy are embedded from the outset. A risk-based approach, identifying potential data-related threats and vulnerabilities, is crucial. Finally, continuous monitoring and auditing of data handling practices are essential to maintain compliance and adapt to evolving regulatory landscapes. Question 10. Performance analysis shows that while implementing new customer relationship management (CRM) software can streamline client interactions and improve data organization for an insurance agency, it also introduces new considerations regarding data security and regulatory compliance. Which of the following represents the most responsible approach for an insurance agency when evaluating and adopting such technology? Option A. Focus on a CRM system that primarily enhances marketing capabilities and client acquisition, with minimal emphasis on the technical aspects of data security or the detailed regulatory requirements for data handling. Option B. Implement the CRM software that is most widely used by other agencies in the industry, without conducting an independent assessment of its specific security and compliance features, based on the assumption that its popularity guarantees its suitability. Option C. Select a CRM solution that has a proven track record of robust data security protocols, offers clear audit trails for client interactions, and can be demonstrated to align with all applicable insurance and data privacy regulations before full implementation. Option D. Prioritize the CRM software that offers the most advanced features and the lowest upfront cost, assuming that regulatory compliance will be addressed as an afterthought once the system is operational. Correct answer is D. Prioritize the CRM software that offers the most advanced features and the lowest upfront cost, assuming that regulatory compliance will be addressed as an afterthought once the system is operational. Explanation: this scenario is professionally challenging because it requires an insurance agency to balance the adoption of innovative technology with its fundamental obligations to clients and regulators. The pressure to improve efficiency and client experience through technology must not compromise data security, regulatory compliance, or the integrity of the advice provided. Careful judgment is required to select technologies that enhance, rather than detract from, these core responsibilities. The correct approach involves a thorough evaluation of new technology against established regulatory requirements and ethical standards. This includes assessing data privacy implications, the potential for bias in algorithms, the security of client information, and the impact on the agency's ability to provide accurate and compliant advice. Prioritizing regulatory adherence and client protection ensures that technological advancements serve the agency's mission responsibly. An incorrect approach that focuses solely on cost savings without a comprehensive risk assessment fails to meet regulatory obligations. For instance, adopting a new client management system without verifying its compliance with data protection laws, e.g., GDPR if applicable, or relevant U.S. state data privacy laws, could lead to significant penalties and reputational damage. Similarly, implementing AI-driven advice tools without rigorous testing for accuracy and fairness, and without clear disclosure to clients about the role of AI, could violate principles of professional conduct and potentially lead to misrepresentation or inadequate advice. Another incorrect approach might be to deploy new technology without adequate staff training, which could result in errors, misuse of the technology, and a failure to uphold service standards, thereby breaching client care obligations. Professionals should adopt a decision-making framework that begins with identifying the business need for the technology, followed by a comprehensive review of its technical capabilities, security features, and compliance with all relevant regulations. This should include a risk assessment, a pilot testing phase, and ongoing monitoring. Ethical considerations, such as transparency with clients and fairness in the application of technology, must be integrated throughout the process. Question 11. Implementation of a new customer relationship management (CRM) system for an insurance agency is underway. The chosen vendor offers a feature-rich platform at a competitive price, but their standard contract includes clauses that grant them broad access to client data for system improvement purposes. The agency's compliance officer has raised concerns about potential data privacy violations under relevant insurance technology regulations. Which of the following approaches best navigates this implementation challenge while adhering to regulatory requirements and ethical obligations? Option A. Prioritize the rapid deployment of the CRM system to gain immediate operational efficiencies, deferring detailed contract review and security audits until after the system is fully operational. Option B. Accept the vendor's standard contract terms to secure the best price and rely on the agency's internal IT team to implement additional security measures to protect client data. Option C. Negotiate revised contract terms with the vendor to strictly limit their access to client data, ensuring all data access is anonymized or aggregated, and conduct thorough security audits of the vendor's practices before and during implementation. Option D. Proceed with the implementation as planned, assuming the vendor's standard practices are compliant, and address any potential data privacy issues if they arise post-implementation. The correct answer is C. Negotiate revised contract terms with the vendor to strictly limit their access to client data, ensuring all data access is anonymized or aggregated, and conduct thorough security audits of the vendor's practices before and during implementation. Explanation: this scenario presents a professional challenge because the agency is tasked with implementing a new technology system that will directly impact client data security and operational efficiency. The core of the challenge lies in balancing the desire for advanced functionality and potential cost savings with the absolute necessity of adhering to regulatory requirements for data protection and the ethical obligation to act in the best interests of clients. The agency must make a critical decision regarding vendor selection and implementation that has significant legal, financial, and reputational implications. Careful judgment is required to navigate the complexities of technological integration while maintaining compliance and client trust. The correct approach involves a comprehensive due diligence process that prioritizes regulatory compliance and data security throughout the vendor selection and implementation phases. This includes thoroughly vetting potential vendors for their adherence to relevant data protection laws, their security protocols, and their track record in handling sensitive client information. The implementation plan must also incorporate robust testing, staff training, and contingency measures to ensure a smooth transition and minimize risks. This approach is correct because it directly addresses the regulatory framework governing insurance agencies, which mandates the protection of client data and the responsible use of technology. By prioritizing compliance and security, the agency fulfills its legal obligations and upholds its ethical duty to clients, thereby mitigating risks of data breaches, regulatory penalties, and reputational damage. An incorrect approach that focuses solely on the lowest cost option without adequate security or compliance checks is professionally unacceptable. This failure stems from a disregard for regulatory mandates concerning data privacy and security, potentially exposing the agency and its clients to significant risks. Such an approach could lead to violations of data protection laws, resulting in substantial fines and legal liabilities. Another incorrect approach that prioritizes rapid implementation over thorough testing and staff training is also professionally flawed. This haste can lead to system errors, data inaccuracies, and security vulnerabilities that could compromise client information and disrupt agency operations. It demonstrates a lack of due diligence and a failure to adequately prepare for the operational realities of a new technology system, potentially violating the agency's duty of care to its clients. A third incorrect approach that neglects to establish clear data ownership and access control policies with the vendor is problematic. This oversight can create ambiguity regarding who is responsible for data security and privacy, increasing the risk of unauthorized access or misuse of client information. It fails to establish the necessary governance framework to ensure ongoing compliance and accountability. The professional decision-making process for similar situations should involve a structured risk assessment framework. This framework should identify potential regulatory, operational, and security risks associated with each vendor and implementation strategy. It should then involve a multi-stakeholder review, including IT, legal, compliance, and operational departments, to evaluate the identified risks and proposed mitigation strategies. Prioritizing solutions that demonstrate a clear commitment to regulatory compliance, data security, and client best interests, even if they involve higher initial costs, is paramount. Continuous monitoring and evaluation post-implementation are also crucial to ensure ongoing adherence to regulations and to adapt to evolving technological landscapes and legal requirements. Question 12. Which approach would be most effective for an insurance agency to optimize its reporting and analytics functions within its agency management system, AMS, while ensuring strict adherence to regulatory requirements? Option A. Focusing solely on automating data collection within the AMS without establishing robust processes for analyzing and reporting that data in a regulatory compliant manner. Option B. Implementing custom reporting solutions that prioritize user-friendly dashboards and visual appeal, even if they require significant manual data reconciliation for regulatory compliance. Option C. Relying on external data analysis tools and manual data extraction from the AMS, bypassing the system's built-in reporting features to avoid potential complexities. Option D. Utilizing the AMS's native reporting and analytics capabilities to generate data-driven insights for process optimization, ensuring all outputs are validated against specific regulatory reporting standards. The correct answer is B. Implementing custom reporting solutions that prioritize user-friendly dashboards and visual appeal, even if they require significant manual data reconciliation for regulatory compliance. Explanation. This scenario is professionally challenging because it requires balancing the drive for operational efficiency with the stringent regulatory obligations concerning data reporting and analysis within an insurance agency's technology framework. The agency's core function relies on accurate and timely data, making the reporting and analytics capabilities of its agency management system, AMS, critical. Misinterpreting or misapplying reporting and analytics can lead to non-compliance, financial penalties, and reputational damage. Careful judgment is required to select an approach that not only optimizes processes, but also upholds regulatory integrity. The correct approach involves leveraging the AMS's built-in reporting and analytics features to identify trends, anomalies, and areas for process improvement, while ensuring all data handling and reporting strictly adhere to the relevant regulatory framework for insurance agencies. This means utilizing the system's capabilities to generate reports that can be cross-referenced with regulatory requirements, such as those pertaining to premium collection, claims processing, or customer data privacy. The regulatory justification lies in the principle of accurate record-keeping and transparent reporting, which are fundamental to maintaining the trust and integrity of the insurance market. By using the AMS for this purpose, the agency demonstrates a commitment to compliance and proactive risk management, as mandated by regulatory bodies that oversee insurance operations and technology use. An incorrect approach would be to solely rely on manual data extraction and analysis outside the AMS. This fails to leverage the integrated capabilities of the technology, increasing the risk of human error in data manipulation and potentially leading to inaccurate reports. Ethically, it suggests a lack of commitment to utilizing available technological safeguards for data integrity. Another incorrect approach would be to customize the AMS reporting features extensively without a clear understanding of the underlying data structures and regulatory reporting standards. This could result in reports that are technically functional but do not accurately reflect the required regulatory metrics, leading to misinterpretations and potential noncompliance. The regulatory failure here is in generating reports that do not meet the specific, often detailed, requirements of the governing bodies. A further incorrect approach would be to prioritize the aesthetic presentation of reports over their accuracy and regulatory relevance. While visually appealing reports can be beneficial for internal communication, if they obscure or misrepresent critical data points required for regulatory oversight, they become a compliance risk. The ethical failure is in prioritizing superficial improvements over substantive adherence to legal and regulatory obligations. Professionals should adopt a decision-making framework that begins with a thorough understanding of the specific regulatory reporting requirements applicable to their jurisdiction and the type of insurance business conducted. This understanding should then inform the selection and configuration of AMS reporting and analytics tools. The process should involve regular validation of AMS-generated reports against known data and regulatory benchmarks, and a commitment to ongoing training on both the AMS capabilities and evolving regulatory landscapes. Question 13. The analysis reveals that an insurance agency is considering implementing a new AI-powered customer service chatbot, which approach best ensures compliance with insurance regulations, specifically concerning data privacy, fair treatment of customers, and accurate record-keeping. Option A. Focus the assessment solely on the technological capabilities of the AI chatbot, with minimal consideration for regulatory implications, as long as it appears to improve customer interaction speed. Option B. Prioritize the cost-effectiveness and efficiency gains offered by the AI chatbot, assuming that existing general compliance policies will adequately cover its operations. Option C. Conduct a thorough impact assessment of the AI chatbot's functionality against all applicable UK insurance regulations and data protection laws, identifying potential compliance gaps and developing mitigation strategies before deployment. Option D. Deploy the AI chatbot immediately to gain a competitive advantage and address any potential regulatory issues that may arise retrospectively. The correct answer is C. Conduct a thorough impact assessment of the AI chatbot's functionality against all applicable UK insurance regulations and data protection laws, identifying potential compliance gaps and developing mitigation strategies before deployment. Explanation. This scenario presents a professional challenge because it requires an insurance agency to balance the adoption of innovative technology with its fundamental obligation to comply with stringent insurance regulations designed to protect consumers and ensure market integrity. The agency must proactively assess how new technological tools might impact its adherence to existing rules, rather than reacting to potential breaches after implementation. Careful judgment is required to identify potential compliance gaps before they manifest as regulatory violations. The correct approach involves a comprehensive, proactive impact assessment of the proposed technology against all relevant insurance regulations. This means meticulously reviewing how the technology will affect data privacy, customer communication, record keeping, complaint handling, and fair treatment of customers, among other areas. Specifically for an insurance agency operating under UK regulations, this would involve considering the Financial Conduct Authority's FCA principles for businesses, particularly Principle 6 customers, treat fairly, and Principle 7 communications with clients, as well as the General Data Protection Regulation GDPR for data handling. The agency must ensure that the technology's functionality and deployment do not inadvertently lead to misrepresentation, inadequate disclosure, or breaches of confidentiality. This approach demonstrates a commitment to regulatory compliance and consumer protection, which are paramount in the insurance sector. An incorrect approach that focuses solely on the technological benefits without a regulatory review fails to acknowledge the legally mandated obligations of an insurance agency. This oversight can lead to significant regulatory breaches, such as inadequate data security measures, violating GDPR, or communication practices that do not meet FCA's standards for clarity and fairness, potentially resulting in fines, reputational damage, and loss of consumer trust. Another incorrect approach that prioritizes cost efficiency over regulatory due diligence is equally problematic. While cost savings are important, they cannot come at the expense of compliance. Implementing technology that is cheaper but does not meet regulatory requirements for data protection, consumer disclosure, or record keeping will ultimately be more costly due to potential penalties and remediation efforts. A third incorrect approach that assumes existing compliance frameworks are sufficient without specific review for the new technology is also flawed. Technology often introduces new ways of interacting with customers and handling data, which may create novel compliance challenges not adequately addressed by older, general frameworks. A specific assessment is necessary to identify and mitigate these new risks. The professional decision-making process for similar situations should involve a structured risk assessment framework. This begins with identifying all relevant regulatory obligations. Next, the proposed technology should be evaluated against each of these obligations to determine potential impacts, both positive and negative. Where potential negative impacts or compliance gaps are identified, mitigation strategies must be developed and implemented before the technology is deployed. This iterative process ensures that technological advancement and regulatory compliance proceed in tandem, safeguarding the agency and its clients. Question 14. The monitoring system demonstrates that the insurance agency's website is consistently ranking high for relevant insurance terms. However, an analysis of the website's meta descriptions reveals they are highly optimized for keywords, but do not always accurately reflect the specific services offered on the link page. And the agency has recently engaged in a campaign of purchasing backlinks from unrelated websites to boost its domain authority. Which approach to SEO best aligns with regulatory compliance and ethical advertising standards for an insurance agency? Option A. Continue to heavily optimize meta descriptions for keywords, even if they are not perfectly aligned with page content, and aggressively purchase backlinks from any available source to maximize search engine visibility. Option B. Prioritize keyword stuffing within website content and meta descriptions to ensure top rankings, and disregard the source of backlinks as long as they contribute to domain authority. Option C. Focus on creating high-quality, informative content that accurately describes services and licensing, ensuring meta descriptions are truthful and relevant, and avoiding artificial link-building schemes. Option D. Rely solely on paid advertising campaigns to drive traffic, as SEO practices are too complex to manage in a compliant manner. The correct answer is C. Focus on creating high-quality, informative content that accurately describes services and licensing, ensuring meta descriptions are truthful and relevant, and avoiding artificial link-building schemes. Explanation. This scenario presents a professional challenge because insurance agencies, in their pursuit of online visibility through search engine optimization, SEO, must navigate the fine line between legitimate marketing practices and potentially misleading or deceptive advertising. The core difficulty lies in ensuring that SEO efforts do not result in the misrepresentation of services, the promotion of unqualified products, or the creation of an unfair advantage that could harm consumers or other agencies. Regulatory bodies are increasingly scrutinizing online marketing to protect consumers from misinformation, and ensure fair competition. Therefore, a deep understanding of the specific regulatory framework governing insurance advertising and technology use is paramount. The correct approach involves a proactive and transparent method of SEO implementation. This means focusing on providing accurate, relevant, and valuable content that naturally attracts search engine attention. It prioritizes clear disclosure of services, licensing, and any affiliations, ensuring that search results accurately reflect the agency's offerings and capabilities. This approach aligns with regulatory requirements that mandate truthful and non-deceptive advertising, as well as ethical obligations to act in the best interest of consumers. By focusing on organic growth and transparency, the agency avoids practices that could be construed as manipulative or misleading. An incorrect approach that relies on keyword stuffing and misleading meta descriptions fails to adhere to regulatory standards for advertising. Keyword stuffing, the excessive repetition of keywords, can be interpreted as an attempt to artificially inflate search rankings, which is often viewed as a deceptive practice by search engines and regulators alike. Similarly, using misleading meta descriptions to entice clicks under false pretenses directly violates regulations against deceptive advertising. This approach prioritizes short-term ranking gains over long-term consumer trust and regulatory compliance, risking penalties and reputational damage. Another incorrect approach that involves purchasing backlinks from low-quality or irrelevant websites also presents significant regulatory and ethical issues. While not always explicitly illegal, such practices are widely considered manipulative and can violate search engine guidelines, leading to penalties. More importantly, from a regulatory perspective, if these backlinks are used to promote services or products that are not accurately represented or are misrepresented, it can fall under deceptive advertising. This approach prioritizes artificial influence over genuine value and transparency, undermining the integrity of online information and potentially misleading consumers. The professional reasoning process for navigating such situations should involve a thorough understanding of the relevant insurance advertising regulations and technology use guidelines. Before implementing any SEO strategy, professionals should ask, does this practice accurately represent our services and products? Is this information transparent and easily understandable for consumers? Could this practice be interpreted as deceptive or manipulative by a consumer or a regulator? A commitment to ethical conduct and a proactive approach to compliance, focusing on providing genuine value and clear communication, will always be the most robust and sustainable strategy. Question 15. The risk matrix shows a moderate likelihood of data breaches due to the use of external collaboration tools. An insurance agency is considering adopting a new cloud-based platform to improve communication and document sharing among its agents and with clients. Which of the following approaches best addresses the identified risk while adhering to regulatory requirements for data protection and client confidentiality? Option A. Conduct a thorough due diligence process to evaluate the security features, data encryption standards, access control policies, and regulatory compliance certifications of potential collaboration tools, and implement comprehensive data handling policies and staff training. Option B. Rely on the vendor's assurances of data security and confidentiality without independent verification, and allow agents to use the tool for all client communications and document sharing. Option C. Select the collaboration tool with the lowest subscription cost and implement it immediately to realize efficiency gains, assuming the vendor has basic security measures in place. Option D. Implement the collaboration tool with the most user-friendly interface, prioritizing agent adoption and ease of use, and address any security concerns only if a data breach incident occurs. The correct answer is C. Select the collaboration tool with the lowest subscription cost and implement it immediately to realize efficiency gains, assuming the vendor has basic security measures in place. Explanation. The risk matrix shows a moderate likelihood of data breaches due to the use of external collaboration tools. This scenario is professionally challenging because insurance agencies handle sensitive client information, and the adoption of new technology, while offering efficiency gains, introduces inherent security risks. Balancing the benefits of enhanced collaboration with the imperative to protect client data and comply with regulatory requirements is paramount. Careful judgment is required to select tools and implement practices that mitigate these risks effectively. The correct approach involves a comprehensive risk assessment and the implementation of robust security protocols tailored to the specific collaboration tools being considered. This includes evaluating the data encryption standards, access control mechanisms, and data residency policies of any proposed tool. Furthermore, ensuring that the chosen tools comply with relevant data protection regulations, such as those governing the handling of personally identifiable information, PI, and protected health information, FI, if applicable, is critical. Training staff on secure usage practices and establishing clear data handling guidelines are also essential components of this approach. This aligns with the regulatory framework's emphasis on safeguarding client data and maintaining the integrity of agency operations. An incorrect approach would be to prioritize cost savings or perceived ease of use over security and compliance. For instance, selecting a free or low-cost collaboration tool without thoroughly vetting its security features or compliance certifications would be a significant regulatory and ethical failure. This could lead to unauthorized access to sensitive client data, resulting in breaches that violate data protection laws and erode client trust. Another incorrect approach would be to deploy collaboration tools without providing adequate training to staff on secure data handling and privacy best practices. This negligence increases the likelihood of accidental data exposure or misuse, again, contravening regulatory obligations. Professionals should adopt a decision-making framework that begins with identifying potential risks associated with technology adoption, particularly concerning data security and regulatory compliance. This should be followed by a thorough evaluation of available tools against established security standards and regulatory requirements. Implementing a phased rollout with pilot testing and ongoing monitoring of security performance is also advisable. Finally, continuous training and policy reinforcement are crucial to ensure that technology adoption supports, rather than undermines, the agency's commitment to data protection and regulatory adherence. Question 16. Risk assessment procedures indicate that implementing driver behavior monitoring technology for underwriting purposes could significantly enhance risk profiling. Which of the following best represents a best practice approach for an insurance agency to adopt this technology while adhering to regulatory frameworks and ethical considerations? Option A. Implement the driver behavior monitoring technology without any specific disclosure to customers, assuming that the act of purchasing insurance implies consent for all data-related activities. Option B. Update the agency's privacy policy and terms of service to explicitly detail the collection, use, storage, and security of driver behavior data, and obtain explicit customer consent for its use in underwriting. Option C. Rely on existing general privacy policies that do not specifically mention telematics or driver behavior data, assuming they cover all data collection activities. Option D. Deploy the driver behavior monitoring technology immediately and inform customers of the data collection through a general website update, providing an opt-out mechanism after data collection has commenced. Correct answer is B. Update the agency's privacy policy and terms of service to explicitly detail the collection, use, storage, and security of driver behavior data, and obtain explicit customer consent for its use in underwriting. Explanation. This scenario is professionally challenging because it requires balancing the agency's need for data-driven risk assessment with the ethical and regulatory obligations concerning customer privacy and data security. The introduction of driver behavior monitoring technology, while potentially beneficial for underwriting and claims, raises significant concerns about how this sensitive data is collected, stored, used, and protected. Professionals must navigate a complex landscape of consumer trust, legal compliance, and technological capabilities. The correct approach involves a comprehensive review and update of the agency's privacy policy and terms of service to explicitly detail the collection, use, and protection of driver behavior data. This approach is best professional practice because it directly addresses the core regulatory and ethical requirements. Specifically, it aligns with data protection principles that mandate transparency and informed consent. By clearly outlining what data is collected, how it will be used, e.g., for underwriting, risk mitigation, product development, who it will be shared with, and the security measures in place, the agency fulfills its duty to inform customers. This transparency builds trust and ensures compliance with regulations that require clear communication about data handling practices. Furthermore, it provides a legal basis for the agency's data collection activities, mitigating risks of non-compliance and potential litigation. An incorrect approach would be to proceed with implementing driver behavior monitoring without any explicit disclosure or policy updates. This failure to inform customers about the collection and use of their sensitive data constitutes a significant breach of transparency and potentially violates data protection laws that require informed consent for data processing. It erodes customer trust and exposes the agency to regulatory penalties and reputational damage. Another incorrect approach would be to rely solely on existing general privacy policies that do not specifically mention telematics or driver behavior data. While a general policy might exist, it is insufficient when introducing a new category of highly sensitive personal data. Regulations often require specific disclosures for new data collection methods or types of data, especially those that can infer detailed personal habits and movements. This approach risks being deemed inadequate by regulators and failing to meet the spirit of data protection principles. A third incorrect approach would be to implement the technology and only offer customers an opt-out option after the data has already been collected. This reactive approach is problematic, as it often falls short of the proactive consent requirements mandated by many data protection frameworks. Informed consent typically needs to be obtained before data collection begins, not as an afterthought. This method can be seen as circumventing the principle of informed consent and can lead to regulatory scrutiny. The professional decision-making process for similar situations should begin with a thorough understanding of all applicable data protection laws and regulations relevant to the jurisdiction. This includes identifying specific requirements for consent, data minimization, purpose limitation, data security, and transparency. Before implementing any new technology that collects personal data, especially sensitive data like driver behavior, a comprehensive risk assessment should be conducted. This assessment should evaluate the potential privacy risks, security vulnerabilities, and legal compliance challenges. Subsequently, the agency must develop clear, transparent, and easily understandable policies and procedures that address these risks and comply with regulations. This includes updating privacy notices, terms of service, and obtaining appropriate consent from customers. Regular review and updates of these policies and procedures are also crucial to adapt to evolving technologies and regulatory landscapes. Question 17. The audit findings indicate that the insurance agency's current IT infrastructure is becoming increasingly costly and difficult to manage. The agency is considering migrating its core customer management and claims processing systems to the cloud to improve efficiency and scalability. Key concern for the audit committee is ensuring that any cloud deployment model chosen will fully comply with the jurisdiction's specific regulations regarding data privacy, security, and operational resilience for financial services. Which of the following approaches best addresses this concern? Option A. Conduct a comprehensive risk assessment for each cloud deployment model, IaaS, PaaS, SaaS, evaluating vendor compliance, data residency, security controls, and the agency's retained responsibilities against the specific regulatory framework for insurance agencies in the jurisdiction. Option B. Opt for a PaaS solution that allows for rapid application development without conducting detailed due diligence on the provider's underlying infrastructure security or data handling practices. Option C. Implement an IaaS solution and delegate all security responsibilities to the cloud provider, focusing solely on the agency's internal application development and data management. Option D. Select a SaaS solution that offers the lowest subscription cost and the most user-friendly interface, assuming that reputable cloud providers inherently meet all regulatory requirements. The correct answer is A. Conduct a comprehensive risk assessment for each cloud deployment model, IaaS, PaaS, SaaS, evaluating vendor compliance, data residency, security controls, and the agency's retained responsibilities against the specific regulatory framework for insurance agencies in the jurisdiction. Explanation. This scenario is professionally challenging because it requires an insurance agency to balance the benefits of cloud technology with its regulatory obligations concerning data security, privacy, and operational resilience. The agency must make a critical decision about how to deploy cloud services that aligns with the specific regulatory framework governing insurance agencies in its jurisdiction, which likely includes stringent requirements for data protection and vendor management. Careful judgment is required to ensure that the chosen deployment model not only enhances efficiency, but also maintains compliance and safeguards sensitive customer information. The correct approach involves a thorough risk assessment of each cloud deployment model, IaaS, PaaS, SaaS, against the specific regulatory requirements of the insurance industry in the relevant jurisdiction. This assessment should evaluate the level of control the agency retains over its data and infrastructure, the vendor's security certifications and compliance posture, data residency requirements, and the agency's ability to meet audit and reporting obligations. Selecting a model that allows for sufficient oversight and control, while also ensuring the vendor meets all regulatory mandates, is paramount. For instance, if the jurisdiction mandates strict data localization or specific encryption standards, the risk assessment must confirm the chosen model and vendor can meet these. This aligns with the regulatory duty of care to protect customer data and maintain business continuity. An incorrect approach would be to prioritize cost savings or ease of implementation over regulatory compliance. For example, adopting a SaaS model without a comprehensive due diligence process to verify the vendor's adherence to data privacy laws and industry-specific security standards would be a significant regulatory failure. This could lead to breaches of confidential customer information, non-compliance with data protection regulations, and potential penalties. Similarly, choosing an IaaS model without adequately understanding and implementing the shared responsibility model for security, leaving critical security configurations to the cloud provider without verification, would also be a failure. This neglects the agency's ultimate responsibility for data security, even when outsourced. Another incorrect approach would be to select a PaaS solution without ensuring the underlying infrastructure and the platform services themselves meet the jurisdiction's requirements for data integrity and availability, potentially exposing the agency to operational risks and compliance gaps. The professional decision-making process should involve a structured risk management framework. This begins with identifying all relevant regulatory obligations. Next, each cloud deployment model should be evaluated against these obligations, considering factors like data control, security responsibilities, vendor assurance, and disaster recovery capabilities. The agency should then prioritize models that offer the best balance of operational efficiency and regulatory adherence. Engaging legal and compliance experts throughout this process is crucial to ensure all regulatory nuances are addressed. Finally, ongoing monitoring and regular reassessment of the chosen model and vendor are necessary to maintain compliance in a dynamic regulatory and technological landscape. Question 18. Consider a scenario where an insurance agency is implementing a new digital payment system for policy renewals and claims payouts. The agency's primary goal is to optimize this process for speed and customer convenience while simultaneously preventing fraudulent transactions. Which of the following approaches best balances these competing objectives within the regulatory framework for insurance agency technology? Option A. Prioritize customer convenience by minimizing all verification steps to the absolute minimum, allowing for rapid processing of all digital payments. Option B. Mandate a manual review of every single digital payment transaction by a dedicated fraud prevention team before processing. Option C. Implement a comprehensive fraud detection system that combines real-time transaction monitoring, behavioral analytics, and multi-factor customer verification for high-risk transactions, with streamlined verification for lower-risk transactions. Option D. Rely solely on basic transaction validation checks, such as ensuring the payment amount matches the policy renewal fee, without additional verification steps. The correct answer is C. Implement a comprehensive fraud detection system that combines real-time transaction monitoring, behavioral analytics, and multi-factor customer verification for high-risk transactions, with streamlined verification for lower-risk transactions. Explanation. This scenario is professionally challenging because it requires balancing the imperative of fraud prevention in digital payments with the need for efficient customer onboarding and operational processes. Insurance agencies are entrusted with sensitive financial data, making robust fraud detection critical to maintaining customer trust and regulatory compliance. The pressure to optimize processes can sometimes lead to shortcuts that inadvertently weaken security measures. Careful judgment is required to implement effective fraud prevention without creating undue friction for legitimate customers or overwhelming agency resources. The correct approach involves implementing a multi-layered fraud detection system that integrates real-time transaction monitoring with behavioral analytics and customer verification protocols. This approach is right because it directly addresses the regulatory requirement to safeguard customer funds and data against fraudulent activities. Specifically, it aligns with the principles of data protection and consumer safeguarding mandated by relevant insurance technology regulations, which emphasize due diligence in handling financial transactions. By employing a combination of proactive and reactive measures, the agency can significantly reduce the risk of financial losses due to fraud while maintaining a positive customer experience. An approach that solely relies on basic transaction validation without incorporating advanced analytics or customer verification is professionally unacceptable. This failure stems from a lack of due diligence in protecting customer assets, potentially violating regulations that mandate reasonable security measures for financial transactions. It also creates an ethical lapse by exposing customers to a higher risk of financial harm. Another incorrect approach, focusing exclusively on customer convenience by minimizing verification steps, is also professionally unacceptable. While customer experience is important, prioritizing it over security can lead to significant regulatory breaches related to anti-money laundering, AML, and fraud prevention. This approach neglects the agency's fiduciary responsibility to protect both its clients and the integrity of the financial system. A third incorrect approach, which involves manual review of all digital payment transactions, is inefficient and unsustainable for a technology-focused agency. While it might offer a degree of oversight, it fails to leverage technology for process optimization and fraud prevention. This can lead to delays in processing legitimate payments, negatively impacting customer satisfaction and potentially creating operational bottlenecks, which indirectly undermines the agency's ability to serve its clients effectively and comply with service-level expectations, often implied by regulatory frameworks. Professionals should adopt a decision-making process that begins with a thorough understanding of the regulatory landscape governing digital payments and fraud prevention within the insurance technology sector. This should be followed by an assessment of the agency's specific risks and operational capabilities. The chosen fraud prevention strategy should be a balanced solution that integrates technological advancements with robust procedural controls, ensuring compliance, security, and operational efficiency. Regular review and adaptation of these strategies are also crucial to stay ahead of evolving fraud tactics and regulatory changes. Question 19. Strategic planning requires a thorough evaluation of potential risks and benefits before implementing new marketing channels. For an insurance agency looking to leverage social media for client acquisition and engagement, which approach best ensures compliance with regulatory requirements and ethical standards? Option A. Delegating all social media marketing responsibilities to an external agency without establishing clear compliance oversight from the insurance agency's internal legal or compliance departments. Option B. Focusing primarily on creative content and engagement metrics, assuming that general social media guidelines are sufficient for an insurance business. Option C. Conducting a comprehensive impact assessment that identifies potential regulatory and ethical risks specific to insurance advertising and data privacy on social media, and developing mitigation strategies accordingly. Option D. Prioritizing rapid deployment of social media campaigns to gain a competitive advantage, with a general understanding of online marketing best practices. The correct answer is C. Conducting a comprehensive impact assessment that identifies potential regulatory and ethical risks specific to insurance advertising and data privacy on social media, and developing mitigation strategies accordingly. Explanation. This scenario is professionally challenging because social media marketing, while a powerful tool for insurance agencies, carries significant regulatory and ethical risks. Agencies must balance the desire for increased reach and client engagement with the stringent requirements of insurance advertising and data privacy. The rapid evolution of social media platforms and their features necessitates continuous vigilance to ensure compliance. The correct approach involves a proactive and comprehensive impact assessment that specifically considers the regulatory framework, governing insurance advertising and client data within the specified jurisdiction. This assessment should identify potential risks related to misrepresentation, misleading statements, data security breaches, and noncompliance with disclosure requirements. By thoroughly evaluating these risks, the agency can develop robust policies and procedures to mitigate them before launching any social media campaigns. This aligns with the overarching regulatory duty to ensure all marketing activities are accurate, not misleading, and adhere to specific disclosure mandates, protecting both consumers and the agency's reputation. An incorrect approach that focuses solely on maximizing engagement without a regulatory overlay fails to acknowledge the legal obligations of an insurance agency. This oversight can lead to inadvertent violations of advertising standards, potentially resulting in fines, reputational damage, and loss of consumer trust. Another incorrect approach that prioritizes speed to market over thorough risk analysis is equally problematic. While agility is valuable, it cannot come at the expense of compliance. Rushing into social media marketing without understanding the regulatory landscape can expose the agency to significant legal and ethical pitfalls, such as posting testimonials without proper disclosures or making unsubstantiated claims about policy benefits. Third incorrect approach that delegates social media oversight entirely to a marketing team without involving compliance or legal counsel is a critical failure. This division of responsibility creates a blind spot, as marketing professionals may not be fully aware of the nuanced regulatory requirements specific to the insurance industry. This can lead to unintentional breaches of advertising laws, data protection regulations, and ethical conduct standards. Professionals should adopt a decision-making framework that integrates regulatory compliance into the core of their strategic planning. This involves a multidisciplinary approach where marketing, compliance, and legal teams collaborate closely. Before any social media initiative is implemented, a thorough risk assessment, informed by the specific regulatory framework, should be conducted. This assessment should guide the development of clear guidelines, training programs for staff, and ongoing monitoring mechanisms to ensure sustained compliance and ethical conduct. Question 20. Benchmark analysis indicates that an insurance agency is exploring the integration of data from smart home devices, e.g., leak detectors, smart thermostats, and connected car telematics for underwriting and claims management. Which of the following approaches best ensures regulatory compliance and ethical data handling in this context? Option A. Proceed with data collection from smart devices, relying on existing general terms and conditions that policyholders have agreed to, and assume that data security is adequately handled by the device manufacturers. Option B. Focus solely on the potential for reduced claims costs and improved risk assessment, deferring detailed data privacy and security reviews until a data breach occurs or a regulatory inquiry is initiated. Option C. Implement robust data governance policies that include obtaining explicit, informed consent from policyholders for data collection and usage, ensuring data security through encryption and access controls, and providing clear disclosures on how data impacts policy terms and pricing. Option D. Utilize smart device data for underwriting and pricing without informing policyholders, believing that such data is proprietary and can be used at the agency's discretion to identify high-risk individuals. The correct answer is C. Implement robust data governance policies that include obtaining explicit, informed consent from policyholders for data collection and usage, ensuring data security through encryption and access controls, and providing clear disclosures on how data impacts policy terms and pricing. Explanation. This scenario is professionally challenging because it requires an insurance agency to balance the benefits of leveraging new technology like smart home and auto devices for risk assessment and pricing with the stringent regulatory obligations concerning data privacy, security, and consumer protection. The rapid evolution of insurtech, particularly in the smart home and auto sectors, presents opportunities for more accurate underwriting and personalized customer experiences. However, these technologies also generate vast amounts of sensitive personal data, necessitating a robust compliance framework. Careful judgment is required to ensure that the pursuit of technological innovation does not inadvertently lead to regulatory breaches or ethical missteps. The correct approach involves proactively establishing clear, documented policies and procedures for the collection, storage, use, and sharing of data obtained from smart home and auto devices. This includes obtaining explicit, informed consent from policyholders, implementing robust cybersecurity measures to protect this data from breaches, and ensuring transparency about how the data influences policy terms and pricing. This approach aligns with regulatory requirements for data protection, consumer rights, and fair insurance practices. Specifically, it addresses the need for data minimization, purpose limitation, and the right of individuals to understand how their data is being processed, as mandated by consumer protection laws and data privacy regulations applicable to insurance operations. An incorrect approach would be to assume that the use of smart device data is permissible without explicit consent, relying on broad terms and conditions that policyholders may not fully understand. This fails to meet the regulatory standard for informed consent, which requires clear and unambiguous agreement from the consumer regarding the specific types of data collected and how it will be used. Another incorrect approach would be to implement weak data security protocols, making the sensitive data collected vulnerable to cyber threats. This directly contravenes regulations mandating the protection of consumer data and could lead to significant penalties and reputational damage. A third incorrect approach would be to use the data in a discriminatory manner, potentially leading to unfair pricing or denial of coverage based on factors that are not actuarially sound or are prohibited by law. This violates principles of fair underwriting and consumer protection. Professionals should adopt a decision-making framework that prioritizes regulatory compliance and ethical considerations from the outset of any InsurTech integration. This involves conducting thorough due diligence on the technology, understanding the data flows, identifying potential regulatory risks, and developing mitigation strategies. Regular training for staff on data privacy and security best practices, along with ongoing monitoring and auditing of compliance processes, are crucial. When in doubt, consulting with legal and compliance experts is essential to ensure adherence to all applicable laws and guidelines.